Okay, good morning everyone. Welcome to the Preserving Your Organisation as a Going Concern webinar. We will just wait a couple of minutes because I can see people are trickling in. Just wait for people to get settled and then we'll begin. So the webinar is hosted by Power to Change and Locality, but we'll just wait a couple of minutes for people to join and then we'll start and do the welcome properly. Okay, we'll just leave it one more minute because I can see people are still joining and then we'll get going. Okay, so we're a couple of minutes in now, so we'll get going. The numbers have started to slow, so that's brilliant, but people can just catch up if they join now. So welcome to this Preserving Your Organisation as a Going Concern webinar. It's presented in partnership, Power to Change and Locality. And for this webinar, we're going to be, because it's quite in depth and you'll be hearing quite a lot of voices and there's different sections, we'll be asking questions throughout. So if it's okay, rather than put questions in the chat box, which you'll be used to on Zoom meetings, if you could put all questions to participants in the Q&A box, which you should see a little two speech bubbles with a Q&A, and that just means that all the questions can be seen by all the participants and panelists. And it also means that if for whatever reason we don't get around to answering your question on the webinar, or it's a more specific question to your organisation, then the Q&A box gets saved and we'll be able to come back to you later. So we'll be able to email you a reply. So all questions into the Q&A box throughout, and we will read them out and put them to all the panelists. So let's jump to the next slide and see what we'll be talking about. So what you'll get from today's webinar. So there are, as I said, quite a lot of voices on the webinar. So people introduce themselves as they go along and do each section. So you'll get an introduction from Naomi and Jed from Power to Change, an overview of the current situation from Debbie Lamb from Locality, financial options and solutions from Dave Broadbent from Begis Trainer. I should have asked how to pronounce that, Begby's Trainer. He'll correct me if I'm wrong with that. And then advice on governance from Hugh Rollo from Locality. And then, as I said, there's going to be, rather than all questions being taken at the end, we're going to be doing questions throughout so you can ask what you've just heard about in that section. Okay, so without further ado, I'll hand over to Naomi and Jed from Power to Change, and they'll kick us off today.
Thanks, Lucy, and welcome everybody. We've just been saying before, actually, it's a bit of a rare sort of rainy day today for a lot of people. So I'll introduce you about Power to Change. Power to Change is an independent charitable trust that supports and develops community business in England. So what do you mean by community businesses? They're organisations that are locally rooted and sort of run and led by local people. And they trade, doing some sort of trading, which quite clearly can show there's some community benefit in what they're doing to help improve the lives of local people. So from pubs to libraries, shops to bakeries, swimming pools to solar farms, community businesses are creating great products and services and providing employment and training and transforming lives. So we believe that we can create better places through community business. If you've not already visited our website, I'm sure you have, but there's lots of information on there and lots of examples around different types of community businesses across England. Do you want to move on to the next slide, Lucy? Okay, so we're hosting this webinar today as part of our commitment to helping the community business sector survive these very challenging times. I think it's always really important, we always keep reminding ourselves that these are unprecedented times and we're all learning and managing as best we can. I want to say that we get this at Power to Change, and that's why we're really pleased to be working with key partners such as Locality to support many community businesses to hopefully give you some practical advice about surviving and how to keep things going when, you know, when things do get really tough. In terms of other things we're doing, you can see on this slide, we've got our COVID-19 web pages, which have got lots of frequently asked questions on there. There's a statement from our CEO and loads of different links to different sector support that's available. We've launched a £12 million crisis support package to community businesses who are facing a loss of trading income during the coronavirus crisis. Obviously, we're doing things like this with Locality and other partners to make sure we can share information and resources and other funding available to support community businesses. If you've not already signed up to our weekly newsletter, then please do so. There's lots of relevant information and guidance coming through there each week. And we're also analysing and signposting government support and lobbying for community businesses. There's a blog which is regularly updated from our policy manager on our homepage. So please do check out those things on our website. Okay, if you move the slide on, great. Thanks, Lucy. So as a responsible funder, we want to make it clear that Power to Change is here for you. We invest money in community businesses and we believe in what you're doing, and importantly, the difference you're making to local people in the communities where you live and work. So a key message from us is please don't suffer in silence, but get in touch. If you can, the first thing to do, if you are concerned about where you're going, what's happening with your community business, please do get in contact with the main key contact for your grants or investment initially. If not, there's an email address at the end of this webinar where you can contact us. What I'd like to say is the earlier you flag a concern about your community business's future, the sooner we can get support to you. I manage our contingency support service, which provides specialist advice and support from our delivery partners, Locality and Eastside Primetimers, to identify how best to get some rescue in there before it's too late. Unlike Christmas, we don't like surprises. So if you early can flag a concern with us, then get in touch, and then we can, get in touch before you need to contact Dave and Insolvency Practitioners. So I hope after this session that you come away with new knowledge, with ideas of practical steps and options you can take to stay afloat, be clear on what warning signs to look out for and how to respond. And finally, be reassured that help is out there and you don't have to manage challenges on your own. I'd like to welcome Debbie Lamb and Hugh Rollo from Locality, who have a wealth of experience of supporting community organisations to survive troubled waters via their lifeboat service. And I'd also like to welcome Dave Broadbent from Begbie Trainers, who has done some work with Debbie in the past as well. And Dave's here to help us demystify the world of insolvency practitioners and how they work. Thank you for your time this morning and input into helping community businesses. Before I hand over to Debbie, I just wanted to introduce Jed as well, a colleague at Power to Change, one of the development managers here. Jed's done quite a lot of work around protecting community assets and had some experience around insolvency. So Jed, just want to hand over to you in case you want to add anything at this point.
Thanks, Naomi. I think that's a great intro. Thank you. And there's probably not a great deal I wanted to add other than looking at some of the work that we've done, as you mentioned, on the Protecting Community Assets inquiry. I think one of the findings that came out of that report, and I'll make sure the links shared around with everyone attending after this, was that sense that a lot of communities look in control of assets can sometimes feel a bit left alone once they've actually acquired the asset, and it's this type of webinar and support that partners like Locality and Power to Change as a funder can provide is the importance of planning for rescue situations to make sure the impact limitation scenarios where the actual monetary value of assets might be low, but the loss of community interest and public benefit can be really significant. And we're, as Naomi says, we're looking to make sure that we work with organisations where possible to mitigate those issues. I think also for any organisations that are joining that structure as societies, it's worth having a look at Cooperatives UK insolvency reforms press release, which they've done recently, which is looking at the summary of changes, which I'm sure will be touched on by colleagues on the reforms in some of the administrations and insolvency legislation to look at moratorium periods for financially distressed businesses and new restructuring procedures, which we think can also be applied to cooperative and community benefit societies and then obviously companies that make by guarantee and everything else. So it's probably it's a very good time to be aware of this stuff and as Naomi says, to make sure to be on top of it and for things not to come to us as a surprise. So I'll hand over to Debbie. Thanks.
Hi, Jed. Thank you. I'm Debbie Lamb. I'm a development manager at Locality. Very briefly, I manage our lifeboat program and the contingency support program with Power to Change, both of which work with community businesses which are experiencing problems. Personally, I've been through issues of where a company is insolvent and trying to restructure organisations. So, it happens to everyone, and I think that's what we want to say, is it's about being able to manage the process. For those of you who don't know us, Locality believes in the power of community to create a fairer society. We're a national membership organisation providing specialist advice and support. We provide opportunities for peer learning, resources for local people to get involved, and we campaign for a better operating environment for community businesses and community organisations. Could I have the next slide, please? Our member network has hundreds of community organisations in membership. They provide the services that people need in their local communities, and in the good times, in spaces where everyone belongs. And the membership network works with about 400,000 people every week. We thought it would be useful to explain some of the key terminology. Now, a lot more is going to be said on these, but just very briefly, a going concern is a company which has the resources needed to continue to operate for the foreseeable future. Now, it'll be a conversation that many of you will have on an annual basis when you do your annual accounts. And many of you will have felt quite confident about this in March, but may feel less confident now. It's going to be a key thing we're going to discuss going through this webinar. Insolvency is where an organisation has insufficient assets to discharge its debts and liabilities. Wrongful trading is where directors continue to trade knowing that the company is insolvent, that they don't have money to meet their debts. Administration is when a company is insolvent and is put under the management of a licensed insolvency practitioner. Yeah. A company voluntary arrangement is an alternative to closing the company due to insolvency. It's a legally binding agreement with the company's unsecured creditors to pay a proportion of the debt. And Dave will be talking a bit more about that. And an insolvency practitioner is a licensed professional who's able to act in cases of company and individual insolvency. Now, that was a quick run through some of the terminology. We'll be talking about it a bit more. I just wanted to do a quick general introduction about where we're at the moment. There are very few organisations which have not been impacted in some way by COVID-19. So, I think we need to say to people, you're not alone. Everyone has problems of some form. In terms of financial viability, furlough has delayed the issue for some organisations. But as we're starting to look at the end of the furlough scheme and the start of reopening, that's another minefield which people are having to grapple with. How they can open safely, but also how they can open in a financially viable way. We're going to say it in all of this. This is always advice with a caveat. We've tried to keep this as up to date as we possibly can, but things are changing on a daily and a weekly basis. As Jed's pointed out, there's lots of information out there on Co-op's website, on Locality's website, on Power to Change website. The government is giving new advice all the time, and it's important to keep up with that. Could I have the next slide, please? And just on all of, the kinds of messages we're giving out is about, keeping cash, retaining ready cash is really important in these circumstances. Knowing your numbers, doing cash flow forecasts, looking at best case scenarios, worst case scenarios, and so on is really important. The board should be being involved in all of the kind of decision making about finances and also about the health and safety of reopening. Keep talking to your funders, as Naomi and Jed have said, and also talk to stakeholders and talk to creditors. They're ready to hear from you. We all know that these are unprecedented times. Claim what you're entitled to. Many organisations at the start of this were thinking, we don't really need to furlough staff, we'll get through this, but are looking at diminishing reserves. So do work out what you're entitled to and claim it. And for some organisations, loan finance may be an option. If you looked viable, if you were viable in March, and you expect to be viable again when all the lockdown is lifted, then this may be a possibility.
Okay, so we've just got one question that's come in at the start of this section, which is, do organisations have to be in receipt of power to change or locality support before they can access the lifeboat service?
Organisations would need to be in receipt of power to change funding to access the contingency support service, and Naomi may want to say a bit more about that. People have to be members of locality to access lifeboat.
Well answered. Cheers, Debbie.
Okay, that's all the questions we've got. So great. Well, so we'll hand over to Dave Broadbent, one of the partners at Begbie Trainer. Dave, can you correct me on the pronunciation of that, please? That would be great. I think I've done it 3 different ways now, so that'd be great.
Problem at all. No problem at all. Firstly, thank you very much for inviting me onto the panel this morning. It's much appreciated. I think certainly, just to give you a bit of background, Dave Broadbent, I've been with Begbie Trainer now for the last 5 years. I've been working as an insolvency practitioner. I've been licensed for about 13, but working within the sector for well over 20, pushing 25 years now. I don't particularly like my title, which is Insolvency Practitioner, because people get scared with that first word. Insolvency is always a danger word that I think people feel concerned about. The way in which people should view an insolvency practitioner is that they're a problem solver. You go to your GP if you've got an illness that you need some guidance on. You don't generally leave it until you're really poorly. So that's the way in which you should view an insolvency practitioner as well. But I mean, if we can move on to the next, it will probably help with the next slide. It will help with giving a bit of background, because Jed, Debbie, everybody was talking about what I think we need to be thinking here is that it's going to be a completely different ball game going forward. I think even though the government are now starting to ease the lockdown procedures and allow businesses to come back into operation, the stringent guidelines that people are going to have to be working along are going to have to be built into it. I think the point that Debbie made earlier was perfect as well about the furlough scheme, brilliant scheme that the government have brought in. The problem is that it has provided stabilizers to an already creaking economy. I think as well what we all need to appreciate is there is no shame in taking advice. There is no shame in putting your hand up and saying, I need some help. If anything, it's the most bravest thing that you will do, because at the end of the day, just to give you an idea, I cover the Teesside area, I cover the Yorkshire area. I also work closely with our Newcastle, Leeds and other offices throughout the country. From my perspective, I generally speak to around about 30 to 35 different businesses on a monthly basis. And out of those, there's only probably about 5 to 6 of them actually do need our help. But more often than not, it's an MOT. It's a way in which you can have that conversation, flag up an issue that you've got. Now, on that slide, you can say the fourth word or the second word on the first word on the second line is the most important one, collectively. What you've got to do, if you go to seek advice from somebody, the first thing that they should be doing is looking to bring in and amass a team of people to work around you. That's not necessarily the team of the insolvency firm. It's the team of your accountant, your lawyer, other advisors that you can bring in, because it's a togetherness. An insolvency practitioner effectively is somebody that can give you guidance, but at the end of the day, there'll be a lot of other advice that you'll need to take. Debbie touched earlier about cash flow projection. What I tend to do is when people come to see me with their problems, the first thing that I look to do, because I understand that the majority of your members will run their charitable organisations through a corporate entity. And the first thing that I suggest that we do is we put together a statement of affairs, because often just putting on paper exactly what the financial circumstances are of that business is quite an eye-opener. The coronavirus impact that has happened earlier this year has had a detrimental effect, and what we did think before to what we are in now are two completely different things. Your cash flow projection then is looking to the future. A lot of people say the cash flow projection isn't worth the paper it's written on. Who knows what's going to happen tomorrow, let alone what's going to happen towards the back end of the year. But it's a blueprint, it's a guide, it's a way in which you can put a plan together, and that plan can be flexed and it can be changed, and you can review it and you can change it going forward. Now, unfortunately, there are going to be scenarios where businesses are going to have to go through a formal restructuring process. As it stands at the moment, the statistics are suggesting that 1 in 5 businesses will either have to close or go through some form of restructure. What I would say is, again, it's key to take that advice as soon as possible. Just because the corporate entity that a business is running through has to go through an insolvency procedure doesn't necessarily mean that the business itself has to fail. There are rescue lifeboats there. Hugh will go on to talk today about the informal negotiation. This is the perfect point at which the first thing that I will say to people is that come to see me is, right, these are all of the different tools and armories that I've got as an insolvency practitioner. But what I'd like you to do is to make sure that you've explored and exhausted every single alternative before we press the button. As Debbie touched on earlier, company voluntary arrangements. I won't go into too much detail, but as Debbie suggested, it's an agreement between a company and its creditors whereby everybody works together to achieve a solution that is beneficial to both the company and its creditors. And often that can be through a restructuring process. Unfortunately, the furlough system has masked the fact that a few businesses are struggling and also perhaps are employing too many people. So again, there is no shame in saying we may just need to lose some staff members. That doesn't necessarily mean that it's going to have to be a closure of the company. And again, as I mentioned on the last point there, liquidation is not the end. I was doing some, in my last seminar that I undertook, I think it's somewhere in the region of about 50 companies at the moment a day are going into liquidation. That doesn't necessarily mean that 50 businesses are closing. It's just showing that those corporate entities are in some way, shape or form being dealt with. If you're okay to go to the next slide, please, Lucy. Thank you. So just very briefly, I thought it'd be useful for the audience to hear a couple of questions that we've been that have been put to us during this period of time. I think it'd be interesting for everybody to know that it has, for most insolvency practitioners, been a quiet time. The furlough scheme itself has given people that ability to effectively place their business into a cryogenic state, to allow it just to sort of sit it out through this period of time. There is, however, as Debbie pointed out before, the wrongful trading, and Jed mentioned earlier about there's some rule changes. The government have spoken about that they will relax their view on wrongful trading. Without going into too much detail, when a company goes into liquidation, there's an element of investigation that's undertaken, and the investigation is to see whether or not the directors have been fit and proper. And unfortunately, if it's found that they're not, then there can be repercussions as a result. And one of those aspects that they look at is wrongful trading. In other words, should we have stopped earlier? Unfortunately, the government haven't really got across that point correctly, because people just think wrongful trading is, my business is struggling. This is the one stick that the powers that be are going to beat me with. There are a number of different pitfalls and potential issues that a director may find that they themselves think that it is simply helping the business, ensuring, for instance, that one creditor is paid because they themselves would be struggling as a result, can result in ramifications to that director. So just to get across again, what I would suggest is take that advice. More often than not, certainly from my perspective and from my firm's perspective, majority of advice that we provide up until the point of when we're formally instructed is free, completely free and non-obligatory. So just use the system, speak to that person, and at the end of the day, they may just simply say, you're fine. But you can make a note of that, and that gives you the comfort that you're not going to get anything coming out of the woodwork at a later stage. First query there talks about pay-as-you-earn and national insurance on the monthly payroll. When people are I think again there's a slight confusion on the furlough situation, that people think that in essence that you can simply just pay your staff members the reduced amount of monies that you get back under the furlough scheme. You've also got to bear in mind that there's a pay-as-you-earn and national insurance that needs to be cleared on that. I think unfortunately a few businesses are just simply ignoring the fact that that debt is continuing to accrue. Can I use the loans to pay off historic debt? That again is a very, very common scenario. The temptation is we all enter into business scenarios, and when we do, sometimes the lender will want to take some form of security or a guarantee from ourselves as directors. Temptation is when we get that loan, can we just at least secure our own position such that the worst case scenario at a later stage, should something happen to the company, at least we are protected. Unfortunately, the wrongful trading bit that I mentioned earlier, that doesn't come under that heading. It comes under what's known as a preference payment, and again that transaction can be reversed. COVID loans, so cheap. Again, there's a lot. I know there's a lot of professionals out there that are almost using it as a selling product. Get this cash while you can because it's it's cheap and free and easy cash. The point that Debbie made is absolutely spot on. Cash is king, without shadow of a doubt. But what you've got to understand is when you take that loan, you are in effect also creating a liability. And you will need to, at some point, be able to justify why you took that loan. I've got about 20 phone calls to make today from people that I spoke to about 2 or 3 months ago. And I know for a fact that 2/3 of them have undertaken the loans. And the first email I received this morning was from one of those people that said, I'm now going to have to, unfortunately, press the button on a closure. What will the impact be of me taking that loan out? Debbie mentioned earlier about that some, if not all businesses are going to, or should we say most businesses are going to face some form of impact, depending on the degree of what it is. The furlough system has unfortunately put a stabilizer on the economy to an effect that people are just pausing what they are doing. They're not making decisions, and it's unfortunately the white elephant in the room of, but surely I don't need to do anything now. I can leave it for a couple of months. I'm always a keen believer in let's deal with the problem now. Let's have the conversation and let's put together a plan, because sooner rather than later it will need to be dealt with. And then finally, it says, can I simply not pay anybody? And the answer is often yes. You can. Everybody understands the point that Debbie made earlier about speaking with your key stakeholders, speaking to your landlord, speaking to your bank, speaking to the revenue and customs. People understand that everybody is struggling at this moment in time, and what they will do is they will listen to you. The rent on a property, your landlord may be prepared to adjust the income figure accordingly. But the key thing is communication, is consistently talking with people. As Jed mentioned earlier in his bit, that nobody likes a surprise. Nobody likes to suddenly find out that the rent, that they can't pay the last 3 months' rent, and certainly nobody enjoys receiving a bad news when they thought everything was fine going forward. But just moving on to the last slide, that's a brief sort of background as to what I do. That's just to give you an idea of the tribe that I'm working with at the moment. They're all good guys. There are contact details there. We cover all sectors. Me and specifically, I cover the charitable sector. As Debbie mentioned, I've done a bit of work with Debbie over the years as well at the same time. But thank you again for allowing me to be on the panel. I appreciate being able to hopefully put a different slant on what an insolvency practitioner does.
So I think that must have been very clear, because we don't have any questions at the end of that section. So we'll move on to, it must have made perfect sense. So thanks, Dave. So we'll move on to Hugh, and then there's another opportunity for questions at the end.
Hi, folks. I recognise a lot of names on the call, and I realise that I'm coming past people's 20-minute boredom threshold to listening to people on Zoom. So I'll try and be quick. I work for Locality. I've been in the sector about 30 years. I'm an active social investor. Could you move the slide on? my claim to fame, I suppose, is I've been doing this for a while. It's a risky business. I used to say that I thought I'd lost more money than anyone else in the sector, but then Jeremy Rogers at Big Society Capital popped up and said, no, I have. I'm a serial social entrepreneur. I've been director and treasurer of loads of sector companies, and I have several failures under my belt. Slide, please. So I just want to talk a little bit about governance in difficult times. I'm not going to go into different legal forms. Obviously, it's slightly different depending on which legal form you have, but essentially we're talking about limited liability. Limited liability, I think, is an extraordinary capitalist gift from society to individuals to allow them to take risk without jeopardizing their own personal wealth. In the case of most social organizations, it also comes with an asset lock, and that asset lock is around mission. And so being really clear at the outset what your mission is and revisiting that seems to me to be really important. Let's move on, please. Oh, sorry, I'm going a bit too fast. So I think it's really important in difficult times. People have talked about no surprises. I think that board members need to be honest and create an environment where people producing information for them can be honest. There is some evidence that there tends to be a bit of split between staff and board in difficult times. The staff obviously have their own jobs and their own salaries to consider. The board may be slightly less engaged, and there is some evidence in our sector of boards wanting to walk away when things get difficult. I think you need to find those who are committed and work with those people. And just understand that there may be different perceptions, you know, for among staff and board. Staff, you know, it's their job, it's their wage, it's their life, whereas some board members just may be sitting there because it's nice to have in the good times. You need to identify those people who are really committed. Everyone is in this together. Directors are jointly and severally liable. Ignorance is no excuse, even if directors resign, and it may be the right thing to do. If you've got some directors who are not up for the fight, get rid of them, but they need to understand that they continue to be liable for a year beyond the time that they resign. The other thing that I've found, next slide please, is sometimes that board, so particularly in difficult times, you get the emergence of dominant expertise. Sometimes the chair, sometimes boards have depended on a specialist treasurer. We leave all the money things to them. I think this is difficult to manage, but you need to understand if you do have dominant expertise, if those people lose their faith in the organization, then the whole thing may turn turtle quicker than you expect. There are sometimes some professional considerations. So if you have lawyers and accountants sitting on your board, they may have professional codes of conduct and that kind of thing that mean that they are particularly risk averse, and you just need to be mindful of that because they'll be thinking about their wider careers and being associated with failure. I think we're too frightened of failure. I like what the tech startups say, you know, succeed or fail fast and then get on to the next one. I think in general, we have a culture in this country where we associate, you know, companies getting into difficulty with failure. As long as that failure's through honest endeavor, I don't think we should apologize. And of course, the last thing that government, local government, our suppliers, our clients want to see is companies closing at the moment. So I really urge people to continue to explore every avenue. But do be aware of over-reliance on dominant expertise, and that feeds into what Dave and Debbie and others were saying. You know, seek outside advice to balance that if you see that happening. Next slide, please. So I think one of the things you have to do is lengthen the runway, by which I mean is buy yourself time. You need to be anticipating. You need to be scenario planning. It is unlikely in this period of uncertainty that things will turn out the way that you think they're going to turn out. You know, a best case, a worst case, a hopeful case. At least I think you should be thinking about those things. I did look at an investment recently where they had 16 different scenarios. It was a nursery group who were trying to plan around when they might reopen and how many kids they would have and how many staff they would have. And they developed 16 different scenarios. I suggest that's a bit excessive, but nonetheless, you know, having a single plan is not sensible in these uncertain times. So try and anticipate, lengthen the runway, and scenario plan. Next slide, please. Negotiate, negotiate, negotiate. You can negotiate with everybody. Your creditors are also your suppliers. It's not in their interest to see you go down. I remember a case where we put in an interim chief exec to an organization that was in difficulty, and because he didn't have any baggage, he just picked up to the phone to their major creditors and said, listen, we're in real difficulty. Will you accept 50% of what we owe you? Otherwise, we're going to close down. And they all said yes. So it's finding the right people with the right verve, with the right chutzpah, if you like, to pick up the phone and make those difficult calls. Your suppliers may also, your clients may also, you know, have a vital interest. And for those of you who have members or stakeholders, so I'm thinking now here of the community shares market, ask all these people to help in times of difficulty. But essentially what I'm saying is everything is negotiable. And again, I think it's sometimes finding the right person to do those things. If you're in the circumstance that you have people who are particularly wedded to a particular form of operation, then they may not be the right people. And indeed, in terms of buying time, reducing costs and perhaps cutting some people early may be the right thing to do. So my final slide then is final slide, please. We're mission-related businesses, and it may come to the point where actually that particular limited liability company is unable to survive. But then, as well as directors, the duty of concern switches to looking after your creditors. It also, it seems to me, it's about saving the service. So can you find people who will take on that service delivery? Can you explore mergers? Indeed, acquisitions. It may be that coming together with another organization enables you to win new business and survive in that way. So a real focus on mission and saving the service seems to me the place to start and indeed the place to end. That's enough for me. Thanks very much.
Okay, thanks, Hugh. So we do have some questions. This is going to go to, I'm going to read the questions out and it'll go to all the panelists. So do feel free to chip in. And also everyone listening, if you have any questions now for whatever section of the webinar, do type it in the Q&A box and we can ask all the people on the call, everyone from Power to Change, Locality and Dave. Okay, how do I tell if I'm insolvent and do the new rules change anything? So that's to everyone.
I can probably step in there then, Lucy. So, I mean, there's two definitions effectively of when a company is insolvent. Debbie touched on one of them before. You can either be insolvent whereby if you were to realise all of your assets, you wouldn't have enough cash to pay all of your liabilities. And that's essentially why I was mentioning before, the great starting point is to put together a statement of affairs, which is basically a balance sheet of the company, because that will prove whether your balance sheet is insolvent. That said, a high percentage of businesses are already in that instance because most of their asset may be intangible based. The main test, therefore, is what's known as the commercial test. So in other words, can a company continue to pay its debts when they fall due? And I always turn it on its head and say, is there any evidence that we've got to show that a business is struggling to pay its debts? As Hugh mentioned just then perfectly, is that just because you are insolvent, a lot of people have this perception that the minute that they are told your business is insolvent, that's it, you have to close the doors, you have to shut down. The answer is you don't. What you have to do, your duties, is you've got to take the appropriate advice and act upon it and make sure that the situation doesn't get any worse. The tools that an insolvency practitioner has effectively are to help you through that process. Being slightly controversial, I think the minute that the government slapped the country down into a lockdown position, it probably made 80% of businesses insolvent at that point, because effectively you had no income stream coming through, yet you were continuing to accrue liabilities. And that's why they put the caveat in about the wrongful trading side. So that's I hope kind of covers off that first one.
Yeah, thanks, Dave. Oh,
Can I just add to that? And Dave's absolutely spot on. I think people need to understand the difference between solvency and liquidity. So it may be that you are short of cash and can't pay your bills immediately, but fundamentally have positive assets, and therefore that buys you time in the sense that you can perhaps borrow against your assets or negotiate with your creditors to buy time, because fundamentally, if you had to sell up, you still can see a position where you could cover all your debts. But even beyond that, what I would say is, while the balance of concern for directors switches to doing the best thing by their creditors, it may be that persisting and developing a new strategy, so pivoting your business, securing that new contract, is actually the best thing to do. So if you have a robust survival plan, even if you are both insolvent in balance sheet terms and illiquid, it can be best to persist for a while to explore whether or not things will get better.
Okay,
Can I add to that as well, that, you know, I think one of the reasons for doing this session is to say that, as Dave has said, that many organisations were thrust from being a going concern in their own terms in March into very uncertain times. And it is difficult for people to know precisely the state of their business at the moment, which is why the rules have been relaxed to some extent. And doing cash flows which look at worst possible, best possible, and what's likely, helps you to work out whether you have got a significant problem and whether that's actually a one about insolvency or about cash flow.
Okay, thanks, guys. Next question. Will an insolvency practitioner just be focused on closing my organisation down and generating themselves a fee? I think I think we've answered that, but Dave, do you want to?
Yeah, I'll jump in on that one. Yes, the Grim Reaper needs to be paid. Bottom line is, well, it might be useful for everybody to know that before I was a partner in Begbie's Trainer, I actually created my own business following my employer going into an insolvent scenario. So off the back of that, it was a very large organisation that unfortunately went down about 10 years ago. I created my own company, my own business, and then built that up over the next 5 years to be purchased by Begbie's. Bottom line is, yeah, absolutely. Everybody needs to generate a fee. Those people that don't, they're not being truthful. However, what I mentioned earlier in the seminar was all initial advice should be free, should be given free, and that's not just the half-hour generation of you just having that quick conversation and going through the rules. You know, I've been helping businesses over the last couple of months, and there's been dozens of emails and phone calls and things along those lines that are there. The last webinar that I did, it was to a load of professionals, and I was saying to these people, we are going to have to give our time for free. You're going to have to provide these people with the assistance that they need. In answer to that question, a good insolvency practitioner should not be just simply looking at the fee that comes as a result of it. Obviously, they do need to get paid in some way, shape or form. Bottom line is, from my perspective, if you provide the right advice in the event that a business has to go into an insolvency procedure, then yes, the insolvency practitioner should get paid. But what I would stress is, if you are speaking to any insolvency practitioner and you feel as though you are being guided the wrong way, go back and speak to your accountant, speak to your solicitor, speak to the person that introduced you to that person, because yes, there are, unfortunately, there's a few bad eggs in the sector.
Thanks, Dave.
If I can just come in on that, Dave's absolutely right. So it may be that you can do better for your creditors by negotiating a creditor's voluntary arrangement. That is really time consuming and can be difficult. But if you're looking at a scenario, I closed down an arts organization through that method, and essentially we were saying to people, we can only pay you 75p in the pound. If we appoint an IP, their fee is going to mean that you're only going to get 25p in the pound. Negotiate everything, including the insolvency practitioner's fee. I closed down another company where the IP agreed out of corporate social responsibility to do the whole thing for $5,000. So negotiate.
Okay. How much should I involve the board in the daily changes to cash flow?
Shall I pick that one up? Not daily changes. Our advice to everyone has been to produce a 13-week rolling cash flow. And depending on what that tells you, you should be reporting to board frequently. As treasurer of a number of organizations, I'm asking for weekly updates to the cash flow. Obviously, if the cash flow is dire, then major changes need to be reported to the board more frequently. At the moment, I don't think that many people can do much better than produce a 13-week rolling cash flow. Some people are finding that they can extrapolate further than that. But as long as there's a decent trust relationship and the board have approved that cash flow, then the staff need to be allowed to get on to manage the situation as best they can.
Okay, thanks, Hugh. As a director, what sort of information should I be asking my community business staff to tell how solvent we are?
I think Dave's slide more or less covered that. So you need a starting balance sheet, you need up-to-date management information, you need a 13-week rolling cash flow, you probably need your original pre-COVID budget to show you how far you're diverging in the current circumstances. from your original plan, so that you can evidence losses as a basis to ask for money. And I think you should have some forward assessment of the quality of your existing income streams. So what we're seeing is people who've got public sector contracts or grants are receiving reassurance from their funders that those contracts will continue, and indeed in some senses be loosened. So some assessment of the quality of your forward income stream. That would do as a starting package.
How do you think the temporary insolvency legislation will impact our sector?
I think it'd be useful for everybody to understand what I think bottom line is that the new legislation that's come into play is very much it's almost like a bit of a shield for businesses. So without going into too much detail, essentially the government have put a bit of an amnesty. What they've done is basically the Revenue have said, we won't pursue companies at this moment in time for any outstanding and historic taxes. There are an ability for you to either put this into an informal repayment plan, or they'll basically allow you to hold off without doing too much other than simply getting in touch with them. So they basically try to translate that onto other creditors. The new powers, it puts an amnesty on suppliers issuing any form of recovery procedures against a creditor in relation to against a company in relation to any debts that they have. Similarly as well, there's an element there which forces suppliers to continue to provide a supply. I think the one and the key thing is people should still take the advice accordingly. The government are very, very good at issuing these statements, which is then picked up by the media. The media then put their own slight slant on it, and then it comes out to people. So people would say, I'm fine, I owe all of these people money and they cannot take action against me. The problem is that the wording actually states a debt that was incurred as a result of the COVID-19 situation. So if you as a business had been dragging around a ball and chain of a load of liability pre-COVID scenario, then you are not protected from those creditors. So, it's all about taking the appropriate advice. So the answer is yes, the temporary insolvency legislation will help. But what you've got to do is it's almost like somebody handing you a new box of power tools and saying, off you go. You might not know how to use them all. You might have some idea about what you're going to do with it, but it'd be much better if there was a handyman there just to point out and show where you did need them as and when required.
Okay, thanks, Dave. So we've got a couple of questions that are quite specific to various organisations. So we've got two more, and then we'll wrap it up. So, can you do a CVA on your own, or do you need external expertise like Dave?
The answer is yes. You do need an insolvency practitioner in order to undertake a CVA. It has to be through a licensed IP. That said, a lot of the work that goes into putting together a CVA doesn't generally involve me. I'm the person that puts together the contractual documentation, but it's you guys working with your professionals who put together that restructuring program. Essentially what Hugh was talking about before, you need to plan. Ignore the CVA. Whenever you are looking at any sort of restructuring program, ignore the CVA. Simply look at, this is where we are. That is where we want to be. How am I going to get from here to there? What will then happen as a result of it is there will be some baggage created. There will be some collateral damage caused as a result. The CVA then deals with that collateral damage. And what you do is you go to an insolvency practitioner and say, this is where I am. That's where I need to go. What process should I go to do that? Just be very careful, because there are a lot of firms out there that will plug CVAs as being the best route to do. Not always the correct route. And just a final very quick one. In the new legislations as well, they have brought out some almost non-insolvency restructuring of cramming down of creditors and things along those lines. So that there are other restructuring programs that you can put in place that don't necessarily need an IP to be involved on it.
So what I would say is, CVA is a way of closing down an organization. you should be negotiating with your creditors before you reach the conclusion that all you can do is close down. So, you know, if you are illiquid, go to your creditors and ask for better terms in terms of payment, or indeed some forgiveness of amounts owed. Don't wait until you need to close the company down to start negotiating.
Okay.
I would
Sorry,
just say
Zoe.
on that, you can negotiate at any time. If you want if you can come to voluntary arrangements with your creditors, that's fine. And that's what a lot of people are doing in the current situation, are talking to landlords, are talking to energy suppliers and so on, and negotiating, you know, to reduce cost in the short term. But if you want it to be legally binding, then as a formal CVA, then it has to go through an insolvency practitioner.
Okay, following on from your advice to negotiate with everyone, the last question is, can I negotiate with HMRC?
Yeah, yes is the answer.
Absolutely.
The Revenue and Customs will listen. The biggest problem, unfortunately, that you've got is actually getting in touch with somebody at the Revenue and Customs. And they've done a fantastic. I was absolutely flabbergasted at how quickly they got their furlough scheme up and running and into place. I personally thought that they would struggle to get the amount. I mean, I think the last count was 8.4 million people on the furlough scheme, and for them to have that up and running within a short space of time was pretty staggering. Unfortunately, what that did mean is that they dragged people out of various other departments. As soon as March the 23rd, March the 24th, I got several emails from the Revenue and Customs saying our recoveries department, our insolvency team are now working on a skeleton staff. Not only because we're having to essentially have people working from home, but because they're all being pulled onto the furlough side. Just a couple of examples of what the Revenue and Customs can do. As an individual, self-assessment, the tax payment that you were due to make at the end of July, you can now postpone that to the end of January. So the on-account payment that you would normally have to pay, again, that can be postponed back. VAT, any VAT that is accrued during the period of the coronavirus situation, again, can be pushed back. And I think that's to March, from memory, it's March next year as well. They have what's known as a time to pay scheme. This was a very, very good product. It was an informal arrangement that they would agree with a company. That generally is spreading out the payments of an accrued liability of tax that you've got over a 12-month period. Again, what I would suggest there, though, is make sure that you go through that with your professional advisor, be it your accountant, your bookkeeper, somebody like you. You would go through that and put a plan together, because the Revenue and Customs do it's a lot of self-assessment. They will simply take what you're telling them as read. And what they won't tell you is that you have to make sure that you maintain those payments. If you miss one, that's game over. If you miss a future tax payment, it's game over. So they do, and you only get one shot at it as well. So you've got to be exceptionally prudent with it. But bottom line is you can do a lot of this without an insolvency practitioner's help. What I would suggest is it's useful to just, you'd go to see your accountant would flag up the fact that your business is struggling. You go to see an insolvency practitioner and you'd work together and say, look, these are the different plans that could happen, and this is what could if you can't battle through it. And exactly what Hugh was saying then, you then look at effectively that from that perspective, trying to move forward without having to go back to the insolvency practitioner. Now, it could simply be that the answer is look, we can't get through this process without actually going into a formal insolvency procedure. But you make sure that every single informal one's done. One final point on that is the point that Hugh was making before about your trade suppliers are also your creditors, your ongoing suppliers. They will be prepared to take a haircut. The Revenue and Customs won't. The Revenue and Customs will expect to receive their money in full. So what you can't do is pick the phone up to the Revenue expecting them to take 25% of the debt, 50% of the debt, 75% of the debt. They want their money back, and they will give you time to pay it. Reason behind that is because any tax that's incurred by a company is effectively deducted from either a sale or from an employee's wages. So as far as they're concerned, you are holding on to their money. that credit is incurred as a result of you not paying it. The only way in which you can get a settlement is, or a compromise as it's known, is through a formal insolvency procedure, to which they will accept 25%, 50% of their debt over a period of time.
The only thing I'd add to that, and I know we need to wrap up, is HMRC are part of government. The last thing government wants is for you to close down and to shove more people on the dole, creating a long-term cost for government. So I think HMRC are particularly well disposed to negotiate at this time.
Completely agree.
Brilliant. Okay, that's great. Well, so that's brought us right up to the hour mark. I think that was just great, and I'm sure everyone learned a lot. So thanks so much to Dave, Naomi, Jed, Debbie and Hugh for taking part, and thanks to everyone for listening. This webinar will be available on the Power to Change website, and on the screen now there are a couple of resources that might be useful for people, and we'll share the link round to everyone who registered after this. So thanks ever so much everyone, and yeah, take care.